The end of the year is approaching, and what you do now is going to determine how much you pay in taxes next year at tax time. So in this video, I am going to tell you 10 things that you can do now in order to help you save $10, $15, $20,000 in taxes. My name is Kesha Randino. I am a business and real estate CPA, and I help you use a tax code to save thousands of dollars in taxes, keep more of the money you make, and build wealth in your business and your investments. So let's get into it. One of the first things you need to do is review your income, your expenses, and what you have already paid in taxes. You need to know where you stand at. Most people really don't look at their numbers until it is time to gather it all together for tax season. So they don't know what they have done throughout the year. They don't know how much money they made. They don't know what they have spent their money on. And so when you review your income and you review your expenses, not only does it tell you where you stand at right now, but it also gives you an idea of things that you need to do before the end of the year in order to help you reduce what you may possibly be paying in taxes. So the next thing is, if you review your numbers and you know that you are possibly going to owe, then you want to start accelerating some of your deductions. So that means paying any outstanding bills that you may have. If you can prepay any bills that you know are going to be coming due, you want to stock up on any supplies that you may have. If you pay for coaching, if you utilize any marketing services, you can go on ahead and pay for those things in advance in order to get the deduction for it. Another thing you can do is buy any equipment that you need. And so under the big beautiful bill, when you buy equipment in 2025 and you put it into service after January the 19th of 2025, then you can utilize bonus depreciation, which is at 100%. Now, when I say any equipment that you may need to buy for your business, you want to ensure that it's actual equipment that you're going to need. We don't want to just start buying things just because we want to get a deduction for it. Yes, deductions are awesome and they are a great way to help minimize your taxable income, but you want to make sure that you're spending the money on something that you're actually going to need for your business, because it's not really saving money if you are spending money to buy something that you don't need and that you are not going to use. Another thing you can do is look at your retirement contributions. So when you contribute to your retirement, not only are you saving on taxes, but you are building future wealth for yourself. And so look at your SEP IRA, look at 401k, traditional or Roth IRAs. And if you are a high earner, you can look at a defined benefit plan. Putting these things in place now will help you from a tax standpoint, but it also helps you build wealth down the line, because we all love what we do, but at some point we're all going to retire. And we want to make sure that when the time comes that we want to retire, that we're going to have enough money in order to do so, because we want to sustain the same lifestyle that we live as if we were still working. Another thing you can do is, if you are operating your business as an S-Corporation, you want to make sure that you are paying yourself the right amount of payroll. When you operate your business as an S-Corporation, the IRS says that you must pay yourself a reasonable salary. So once you establish what that reasonable salary is, you need to pay yourself that amount. If you haven't run your salary yet, or you think you may have done it incorrectly, you need to fix that before the end of the year. Having all of your reasonable salary numbers in place allows you to protect yourself from the IRS if you are ever audited, and it helps you to really legally save money on your self-employment tax, which is one of the reasons why I'm sure you opted to operate as the S-Corporation. So the next tip I have for you is to clean up your books. You need to have your bookkeeping complete. You need to catch up on any months that you may have outstanding, because you need to know what came into your business and what went out of your business. And really, for your tax return to be accurate, you need to make sure that your bookkeeping is accurate. So when it comes to that, you want to record whatever money you make in the business, whatever money you spend within the business. You want to categorize what those amounts were used for, where those amounts came from, and you want to reconcile your book transactions to your bank transactions. That is going to ensure that you have everything recorded and that you haven't missed anything along the way. The next tip is tax planning. Now that you know what your numbers are, you want to do some tax planning before the end of the year. And so if you are an investor, you can look at something such as a cost segregation. So if you are a landlord and have properties that you rent out, whether it's long-term or whether it's short-term, you can do a cost segregation on that property. And when you do a cost segregation, that basically accelerates the amount of depreciation that you can take on that property, usually saving you thousands of dollars in the year that you do the cost segregation. Another tax planning strategy would be tax loss harvesting. So tax loss harvesting is when you take the loss of one asset and offset it against the gain of another asset. This is very popular when you have capital gains. So if there's a chance that you may have sold a rental property and you may be facing a large capital gain, then you can do a tax loss harvesting in order to offset what that gain is, meaning you would either sell or dispose of another asset that will result in a capital loss. Therefore, you are going to offset your capital gain with the capital loss, hence the tax loss harvesting. Another tip is don't forget about any credits that you can prepare to take on your next year's tax filing. Those credits can include energy efficient upgrades to your property. And the thing about that is that due to the big beautiful bill, this is the last year that many of those energy efficient home grade tax credits are going to be available to you. So if that is something that you are interested in, you need to look at that and start the process before the end of the year so you can get the benefit of utilizing that credit. But in addition to that, you can look at education credits. You can look at your retirement plan startup costs. They have credits that comes associated with that. So different credits that may be available to you, research them, know them, make sure whatever it is that you need to do before the end of the year in order to get those set up and get it available for you, that you do so. It's important to know how many of these credits work because usually they do have to be implemented or utilized, or the action has to take place before December 31st. And so you don't want to miss out on any of that simply because you didn't know that it needed to be done. Another tip, and this is a big one, is review your entity structure. So if you are operating your business as a sole proprietor or a single member LLC, take a look at what you have done this year, take a look at what you are expecting to do next year, and determine if you are still operating in the correct business structure. Is it time for you to move over to an S-Corporation? Will that give you a better benefit when it comes to filing your taxes and saving on taxes? Take a look at where you are, know if it's going to be best for you to stay where you are now, or if it's going to be a better benefit for you to change to a different entity type when it comes for tax savings. And now is the perfect time to do that, because if you do need to change, you can change it before the end of the year, getting you the best benefit for tax purposes. And my final tip is don't be afraid to ask for help. If it's the end of the year and any of these things that I have mentioned, you heard it and you just got in a panic and say, okay, I don't have my books together. I'm not sure if I should be doing any type of strategic planning, or I don't even know where to begin. Don't be afraid to reach out to someone. My team is here to help you. If you find that you may need assistance with any of this, don't be afraid to reach out. You can use the link in the description box below to schedule a call with us, because we will be happy to help you and get you on the right track, because nothing is great about overpaying on taxes. The smallest of steps can help you save thousands of dollars in taxes. I hope this video has been helpful for you. Use these tips in order to save on taxes next year. Make sure you like this video and subscribe, and I look forward to seeing you in the next video. Bye.